Ja, herzlich willkommen zu einer neuen Ausgabe SI Talk und bei mir ist heute quasi irgendwie fast ein Startinterview. Goldsource, die Company kennen Sie schon. Ich habe mit Janis 6, 7 Interviews gemacht. Allerdings ist es bis 2016 so. Also das letzte Interview, was wir geführt haben, war 2016. Und seitdem hat sich bei der Company extrem viel getan. Das erste ist mal, sie haben schon mal einen neuen CEO. Unser Steve wird uns das jetzt neu vorstellen und auch die Company finde ich mittlerweile relativ spannend. Ich habe es früher auch immer interessant gefunden, aber jetzt haben sie sich ein bisschen kombiniert, denn sie haben jetzt richtig viel Geld und sie haben eine Ressource auch, mit sehr gute Ressource und das macht es jetzt eigentlich spannend und jetzt bin ich gespannt, ob das jetzt der Riesendurchbruch wird bei dem Unternehmen. Steve, thank you to have time. And I said in my German introduction, this is nearly a start interview. The last interview I do with Yanis was 2016. So in the last 5 years, the company changing totally. Not only the logo is changing, also the share structure has changed. You have now a lot of cash. And this is, I think, the big difference between the past and now. For me is that you have really now a lot of money and you can do a lot of things. Before it was always, from my point of view, it was a little bit undercapitalized, the company, so they cannot do the things what they should do to bring the project really forward. And now I hope that we are now on the edge to a new dynamic by the stock price. And the share price, by the way, in the last year, it looks like that it's not really doing too much. But you have a share consolidation. I think it was 10-1. Was it 10-1?
We had a 10-for-1 share consolidation. That became effective last Friday.
Yeah.
Correct.
And for the last year, it looks like that the share price is going only sideways. But in the background, I think a lot of things are changed. And maybe you can give us a first introduction to your company. You're also new. I think you're coming into to the company the last 6 months or something.
Yeah, six. So that's correct. Yeah, I'm 6 months with the company. So another sort of new element to the company and another new element to the company. My background is mixed. I mean, I came into this industry in the mid 90s as a mining engineer, as a process engineer, focused on gold projects through consulting. And then I spent the bulk of my career in capital markets. And still focused in mining, of course, and focused on sort of getting involved with junior companies all the way to senior gold producers. So very sort of substantial breadth in my background, but started technically and I've sort of come back to the technical side.
Mm-hmm. So, give us the first introduction to your company. So, what is when you start with the company? What do you see, and when you think, okay, things I must change?
Well, for me, I mean, I take a lens of. I mean, I've seen so many gold projects, and base metal projects, and have a very good understanding of the mining industry and the backdrop and the cycles. It's critical for me, and I think a lot of your viewers and your guests would say the same thing. I mean, the team is critical. The asset is sort of fundamental to what you want to do, and you have to understand the skills of your team and does that suit the asset that you have, and then where you are in the cycle is absolutely critical. And often not a lot of attention is sort of paid to that, of course, but you need the right type of asset for frankly any mining cycle, because this industry, and this is sort of critical to how this management team thinks about projects, but this industry is so pro-cyclical. Mm-hmm. And what I mean by that is through the industry, basically through the benefit of higher metal prices, and often that's not just gold prices, that could be base metal prices and buoyant prices across the metals complex. I mean, that could be occurring all at the same time, and what that creates is an industry backdrop that gets congested very quickly for assays, for engineering services, for eventually construction. We're not there yet. We're starting to see that, but what this management team and myself are keenly focused on are asset styles that can navigate the cycle, right? So they're sufficiently high quality, but critically, there's opportunities and tangible opportunities for phase development. And you'll see through as we sort of go through and touch on Goldsource and Eagle Mountain project is what we have that is very important to this asset. And navigating sort of procyclically this industry is we have tangible opportunities to phase the development, specifically with a low capex intensity starter option that provides the baseline production, and then eventually we bring in the bigger project, and ideally do that with cash flows, 3 to 4 years down the road. But very very few projects, actually have this sort of tangible scalability that this project has. So maybe taking a further step back on Goldsource, the asset that we have is called Eagle Mountain. We own it 100%. It's located in central Guyana. It is advanced stage exploration. And what I mean by that is there exists a 43-101 resource. So we're sort of well beyond that proof of concept stage. And in fact, Goldsource has the second largest undeveloped 43-101 resource in Guyana, which is not insignificant. There is a lot of activity happening in Guyana, and notably that the largest project was just acquired by Gran Colombia. Our resource estimate is fresh. It's freshly minted. We just reported that earlier this year. The resource stands at 1.7 million ounces of gold hosted in the indicated and inferred categories, and still runway to grow that, as we've got a project where we been focused on the western side of the property, and that's been because of access. We've had good access on the western side. The eastern side of the property is very prospective. We've just done very little work, so a little bit more cash, actually quite a bit more cash in the company now, and you alluded to that, allows us to do work on the eastern side of the property essentially for the first time. So there's three key features of Goldsource that sort of I'd ask your viewers to think about, and it sort of ties into the scalability and the phase development strategies that we look for as a company. And the first feature is that the deposit is shallow. So this 1.7 million ounces I refer to is from surface down to only 80 meters of depth. So the project is sort of laterally extensive. So what this allows for, of course, is sort of a shallow open pit configuration, and of course very little overburden and a low strip ratio, which is important. The second point is the surface mineralization in that is hosted in soft rock saprolite. So one of the pictures in our presentation, and maybe Joe, you can bring it up at some point, it just shows a trench that we did through the saprolite, and this is on surface, very friable, very weathered material, but very well mineralized.
Mm-hmm. And sorry to interrupt you. We know we are also in the industry for the last 15, 20 years, but the saprolite is not really common, or we don't hear too much from them. Is this, or you need a different method to work with them? So when you're coming to process, that you need a different circle for them, or you can use it I would say a normal leaching, or what kind of process you need that you can use this saprolite? And is this a different between, you have saprolite and fresh rock? Do you need different methods to get your gold out?
Just in terms of if we talk about the mining and the processing, they're quite different with saprolite and with fresh rock. Saprolite is not so rare. Maybe you don't hear about it much. Many projects in Guyana do have saprolite. Many projects in West Africa will also have saprolite. A good example might be the Bombori project, which is currently being developed, and that's a good example of a saprolite project. So what it allows you to do, if you have significant saprolite, which we do, we've got about almost 500,000 ounces hosted in the saprolite. In our case, it's because it's on surface, it's very weathered, it's free digging. I say free digging, it's not free of cost, but it's free digging, meaning no drilling, no blasting. You dig with an excavator, and this is the nature of it. It's very friable, and the implications from a processing perspective, of course, is because it's friable, you'll stick it into a processing plant, but the front end of your processing plant doesn't have the very extensive crushing and grinding that you'd have with a conventional hard rock plant, right? So this is sort of speaks to the scalability of the tangible scalability of this asset for phase development, we can start with a much lower CapEx intensity by way of starting in the saprolite, and then move into the fresh rock in later years. From a mining perspective, again, it's sort of no drilling, no blasting. From a milling perspective, on the saprolite, it's critical because you've got lower footprint, lower sized or smaller sized equipment at the front end, but the back end is very similar. So for us, the saprolite's amenable to leaching, which would have sort of leaching in vats, and we're seeing sort of 95-96% recovery in that. So very favorable metallurgically, favorable from a mining point of view, favorable from a phase development point of view with the saprolite. So we talk about it a lot, and that's sort of the second key point for us. The third key point with this deposit, shallow, it's got saprolite, and it's as I said, it's laterally extensive. So essentially, it's on surface, and it's about 2.5 kilometers long. The main Eagle Mountain deposit about 1.5 kilometers wide. But by virtue of being on surface, what it allows you to do is cherry pick the high grade early in the mine life. So you can schedule the higher grades earlier in the mine life, and do that without sterilizing your ore body. There's some companies that talk about having a higher grade starter area, but you might have to ramp down to it, or you might have to incur a higher strip ratio and stockpile low grades to process high grades. For us, it's on surface. So we just put the excavator, because this is free digging, we put the excavator and just start digging in the high grades. And some of our recent exploration results, notably in an area called Ounce Hill, we hit 34 meters true width of 20 grams per ton from surface in saprolite. So this would be one of the areas where we would look to sort of put that excavator and start mining. So yeah, I mean, there's three really important features to this. It's shallow, low strip, friable saprolite for low capex intensity, and then sort of being able to schedule the high grades, give us that comfort that we can sort of navigate through this pro-cyclical development.
Okay, these high grade areas are for sure unbelievable. So especially when you say this in the wider context, that you have really it's easy to mine this. But what is now the strategy? You're sitting now on a lot of cash, and I think you're in a better position than ever before in Goldsource. So what you're doing now with all this cash? What are the plans?
Yeah, so you're right. I mean, as a company previously, we raised anywhere from sort of $6 to $7 million, which was kind of one year worth of exploration activity with 3 drills, for example. That's kind of the run rate. We were sort of run rate spending was about 5.7 million a year Canadian, is kind of where we were for the last couple of years. So at the moment, we've got 14.1 million Canadian. We just raised 12.65. With some significant resource funds coming into that financing and some new investors coming in as well. So the plan here is to take that very large resource that we have, which is a combination of indicated and inferred, and take the inferred component as a starter point and infill drill that. Take the drill spacing from approximately 50 meters or more down to about 25 meters. So for us to get resources to classify as indicated, we need 3 drill holes within 90 meters spacing. That's kind of where we need. So we have to take the inferred and tighten up the drill spacing. Aspirationally, we'd be looking to convert about 75% of the existing inferred to indicated. So based on the existing indicated plus a conversion of the existing inferred, we'd be looking at sort of anywhere from sort of 1.3 to 1.5 million ounces of indicated mineralization. We would take that as the basis for a pre-feasibility study, and that would be sort of the next step, and bring this deposit forward with further engineering on the mining side, on the metallurgy, environmental, tailings, the whole covering all the disciplines, and deliver a pre-feasibility study the middle of next year. So the funding will be used for infill drilling on the current resource, exploration drilling. Still, we've got substantial drill targets that we've already discovered with several drill holes. We need to delineate that to bring that into the next resource, or maybe a resource after. And then we have some greenfields exploration, both on the western side of the property and on the eastern side of the property, which we haven't really touched, where we're going to get to for the first time. So there's that sort of combination of sort of parallel tracking the engineering work, as well as carrying on with exploration here. and upgrade the existing resources as well as expand and look for new targets in our area.
Is there any plans? So I think that the end goal is also to, or have you any ideas how high the capex to be to can go maybe into the production? I know Yanis tried this in the past days with small scale mining and so on, that he tried something to produce something, but is there any or any calculation so far where you can say what maybe are the costs to go into the production?
No, we that's right. I mean, there was some sort of estimates that were put out, and there was a let's call it a PEA study, preliminary economic assessment, that was done in about 2014, that was looking at only the saprolite, and at that point in time the saprolite resources were smaller, and it was focused on sort of a gravity only recovery of the saprolite, which didn't include leaching. So they were getting sort of 20, that would be like a 23% recovery, which is not, which is fine for gravity. Okay, but quite frankly, not appropriate to cover all the fixed costs that you'd have with a bigger operation. So we've got now, of course, we still have the benefit of scalability with the saprolite, but the key here is now we have resource scale, which we didn't have before. So when Yanis came in and spoke to you previously, it was a smaller resource, about 980,000 ounces, focused on the saprolite only. It was intriguing, and there was a lot of interest because of the potential for low capex intensity on the saprolite. Now we've got a bigger resource, so we can still start with the saprolite, move into the fresh rock. We've not put a capex number out on either the phase 1 saprolite or the phase 2 fresh rock. Those will come with the pre-feasibility study. I think the best we can do at this point is say, listen, with a resource that we're looking at, in indicated resources that we're looking at, to come back with something that would be, over a 10-year mine life, we'd be looking at kind of 5,000 tons a day, for anywhere from 4,000 to 5,000 tons a day, open pit configuration, low strip ratio, which is critical. You often hear, investors come in and talk about grade, and grade is critical, but, and people say grade is king. Well, but in open pit mining, grade is king, but the strip ratio is queen, right? And we've got extremely low strip ratio with what we're looking at here because it's on surface and tabular. So, we like our economics, but we need to do the work, Joe. And, the key is to get a phase 1, which is as low capex as possible. And, but in the context of still having sort of relevant production level. So to summarize a little bit is what you're doing now with all this cash is drilling, and then in the end you're coming up with a new resource calculation and a pre-feasibility study. Yeah, we are doing engineering still at present. I mean, so there's additional work that needs to be done. Okay, because what we'd like to do by middle of next year with that pre-feasibility, of course, is we need further engineering on the mining, geotech, hydrology, biodiversity work, and in fact we're moving ahead with some biodiversity work as well. So there's other elements that are happening. We talk a lot about the drilling, but there are other elements that need to be in place. As we bring a pre-feasibility study to market middle of next year, we'd like to have these other elements in place, which will help us be in a position to fast track, should the project warrant it, which we think, and Guyana is one of these countries where you can, it's pro mining, and it's got the skills of the people there, particularly for open pits, and it's got sort of a favorable permitting framework. So it is a country where if the economics warrant it and the project warrants it, you can actually move quickly through permitting. So we want to get that other work done in place. So there's we're spending money on drilling, but we want to make sure that we can leverage the benefits of being in Guyana and the benefits of the asset style that we have to move into production quickly. We want to make sure we've got our ducks in a row to be able to do that. So one of my last question is, okay, I understand all the strategy to go forward. But you say also you do some exploration drilling also. So and that is the interesting part of it. You can surprise with them the market. So if you can see or find some extension of your existing
resources is great. When you're coming up with high grade, for example, that was it's great. That's what the market loves, and that is where you get the extra kick and the share price. So when you say, okay, we drill this kind of number this year, what percentage you drill in new area where maybe there's the potential for this interesting news releases, what maybe can bring back the excitement into the stock?
Yeah, the plan, that's a good point. The plan is a drill plan that is at a minimum 16,500 meters. About 50% of that is infill at the moment, and this is prior to us raising money. We had planned to do 16,500 meters with about 50% infill, looking at drilling off the inferred, but then also coming back on some of the areas in the indicated and getting the drill spacing down. And in fact, that high grade discovery that I told you about in the ounce hill area, that 34 meters true width grading 20 grams per ton, that was an infill hole. Okay, so infill most of the time you think of as out of innocuous or just confirming continuity, but in our case is we're having some success with the infill drilling. The pure more exploration drilling we're looking at is we've had 5 discoveries in the last 2 years, and many of those discoveries were on a prominent north-south trend that we've got. The bulk of our resources, in fact about 1.6 million of the 1.7 million has been in the main Eagle Mount deposit. We've had discoveries, 5 new discoveries and prospects on this north-south trend, including Salbora. So Salbora was the only new discovery that made it into the resource because it was the one that's seen the bulk of the amount of drilling to get it into the resource. We've got Toucan, Powys, a new discovery area called Anne, another discovery to the north called Montgomery. They are prospects that we've drilled and had some good results. We need to circle back and make sure we delineate those to see if we can sort of build out the critical mass to get those into the next resource update, which we're looking at putting out later this year. So that there will be more exploration, not just infill, but again, following up on these new discoveries on that north-south trend. And they tend to be higher grade on that north-south trend, but smaller. They're not laterally, they're not at surface, they're not parallel to surface, they're more vertical, subvertical, but they've got an enriched grade. So we are looking at those, and in fact, some of those have very high grades at depth. So we're looking at open pits here, but there's deep roots to this geological system, and you do see that in Guyana, and of course, similar geology in West Africa is what we have here in South America. But deep roots to these systems, so we're having some success at depth, and we sort of need to figure out what to do there, of course, because our focus is shallow open pits. But it does speak to the potential for this to be, a much larger system down the road.
That's a very interesting point. You only drill 50-80 meters so far, or your resources in 50-80 meters. But what is underneath? Then a lot of system going, or the most of system that I know is going much deeper. So do you plan also to test these deep targets too, or is it not at a focus at the moment?
For the vertical, subvertical type structures, we've got Salbora, Powys, Toucan. We are looking more to depth, drilling that's below, up to 200 meters at depth. That would be a deep hole for us in those particular targets. But we haven't done a lot of those, right? We've been focused on the Eagle Mount deposit. It's sort of a layer cake type where you've got mineralized zone, low grade mineralized zone, with the bulk of it, as I said, from surface down to 50 meters in the Eagle Mount deposit. That one we're not going to drill at depth too much. We do know we've got these series of thrust faults and consequently series of mineralized zones that go to depth. But we're happy with what we've got for the Eagle Mount deposit down to 50 meters, and then we'll look at these other targets to depth. Sorry, Mike.
One last question. Not to the project, going more to the shareholder structure. You say a new fund coming in with a new raise. So we're the biggest group now in the company, and maybe you can tell us here a little bit more about the shareholders.
Right, just sort of unmuting the noise in the background. So what we got for this financing, as I said, is $12.65 million with a number of new shareholders. The lead order and the bigger sort of newer shareholder that came in was Van Eck on that financing in their active fund. And we had a number of sort of long-only resource funds that came in on the back of that, which I can't share them right now. They have to go through the filing process, et cetera. So once they file, we'll be able to share with you who they were. But the focus was to bring in investors that sort of have an understanding of what we're doing from a strategy perspective, understand the phased approach, understand sort of Guyana and the geology that we've got. And we're very happy with the quality of investors we've brought into this deal. The share structure is again, we've done this 10-for-1 share consolidation. So previously we would, with post financing, we would have had 520 million shares. So now we're looking at 52.2 million shares in around there on the basic basis. So I think, and what we like to say, of course, is, and this is the feedback we have from investors previously, is they would walk through the presentation, appreciate the quality and the size potential of what we've got in it, sort of vis-a-vis other projects. It's an executable project, and they can see that. But what they also saw was a share structure which wasn't high quality. So we had a quality project with a share structure that was not quality. So we want to provide better alignment between the two of those, and with that, we won't get those investor meetings necessarily where people go, hey, great project, but when are you going to do a share consolidation, right? It was almost every meeting ended with that comment. So we've done that, almost concurrent with this last round of financing. So we like where we're at now with the funding level, 14.1 million Canadian, which is good. And we believe for 2 years worth of financing and 2 years worth of work on the project, and a share structure that's higher quality.
What's the price for the last private placement?
It was at 11 cents.
11 cents, so 110.
Pre-financing, 110.
I was a little surprised, and I expect when you do this consolidation, what's normally happened is that old shareholders sell and you get the pressure on the stock, but not in your stock. Your stock is going up and on the days after the consolidation, and that surprised me. It's a good sign. But
so far so good there. And I also know just through the number of meetings we've had is there was an overhang, not just on the financing, but there was an overhang related to the share consolidation. As I said, every investor I spoke with, whether retail or large institutional, would have a comment on the share structure. So that was also an overhang for us. So it's good to get that out of the way.
Steve, thank you for the first introduction to your company. Hopefully we have time that we can do an interview maybe in 6-9 months when we have more results, or maybe one of these hopefully nice drill results coming up and or unexpected drill results, and maybe they drive the share price higher. Then I also believe that now you have everything what you must have to can drive the share price up. I must say you have really enough ounces in the ground. It's open biddable. You have a lot of cash. You can do a lot of things, and the shareholder structure looks also great. So, and you are in the area was very interesting. So also from a safe standpoint, and also what is happening in the area too. So it's very interesting. Thank you for this. Ja, das war eine erste Einführung wieder nach 5 Jahren, nachdem wir die Company wieder gesehen haben. Sie sehen auch hier den Aktienpreis. Vielleicht sollen wir das auch noch mal kurz einmal zeigen, wo die letzten 5 Jahre hergekommen ist. Also die Aktie hat nicht wirklich gut performt die letzten 5 Jahre. Wir haben zwar schon noch tiefere Punkte gehabt und dort dann wieder auch eine Performance hingelegt, aber da ist schon noch einiges Potenzial drinnen. Aber was wirklich spannend ist, wir haben jetzt eine Marktkapitalisierung von gut 65 Millionen. Wir haben 14 Millionen Cash. Wir haben sehr, sehr gute Aktionäre drinnen. Aber was halt einfach wichtig ist, sie haben 1,7 Millionen Unzen aus Ressource da, also in verschiedenen Ressourcenkategorien. Und was tun sie jetzt? Das tun ist jetzt, sie bohren jetzt auch Infill. Die Hälfte des Bohrprogramms, was sie jetzt mal machen, ist mal Infill, damit sie das in eine höhere Kategorie hochbringen. Und die anderen ist auch so, dass sie in verschiedenen neuen Areas bohren. Ich habe da hier eine schöne Grafik gesehen. Man sieht es hier, da gibt es so einen Nord-Süd-Trend, glaube ich, ist es, ja, Nord-Süd-Trend. Hier ist diese bestehende Ressource und hier ist dieser Nord-Süd-Trend, der wo sie sehr, sehr gute Ergebnisse gehabt haben, wo auch die Bohrungen teilweise tiefer gehen. Hier ist alles in die ersten 50 Meter drin. 50 Meter ist ein Wahnsinn. Und was auch extrem spannend ist, was ich so auch nicht gewusst habe, aber was richtig das spannend ist, diese Saprolite, das ist nicht so selten, man sieht es oder hört es relativ wenig, aber was das Spannende ist, Sie sehen es hier, das ist eigentlich schon sehr poröses Gestein. Das heißt, das Gestein hat sich schon aufgelöst, das ist verwittert und man kann das mit einem ganz normalen Bagger einfach wegschaufeln. Es ist quasi Erde, man muss nichts sprengen, man muss nicht bohren, man muss nichts tun, sondern man fährt mit dem Bagger rein, holt das rauf und das macht natürlich den Prozess extrem einfach. Weniger im hinteren Bereich, sondern im vorderen Bereich des Prozesses spart man sich extrem viel Arbeit, weil man muss es nicht mahlen, man braucht kaum Mühlen dazu und man kriegt trotzdem das Gold raus und sie sagt, Metallurgie ist ungefähr 95% Recovery. Was planen Sie jetzt? Eben Drillen, Exploration Drilling und Pre-Feasibility Study soll rauskommen in den nächsten 12 Monate. Und dadurch wird allerdings auch noch davor die Ressource abgegradet und das macht es eigentlich relativ spannend. Ich finde die Company, wenn Sie das überlegen, 65 Millionen Marktkapitalisierung, 14 Millionen Cash, 1,7 Millionen in Unzen vorhanden in Guyana. Das ist eigentlich eine gute Area. Alles Open Pit ist eigentlich viel zu günstig. Er hat, glaube ich, auch hier irgendwo mal so eine Kalkulation. Da sieht man auch, dass er aus dem Finanzsektor kommt, auch wenn er also Mining-Ingenieur ist, aber man sieht hier, dass er eigentlich eine extrem billige Bewertung ist und wenn man auch noch denkt, dass sie dort auch noch Upgrade-Potenzial haben, sehr viel Upgrade-Potenzial haben, dann muss man ehrlicherweise sagen, ist die Bewertung, was sie jetzt haben, sehr günstig. Was mich gewundert hat, ist, nach dieser Konsolidierung, sie haben die Aktie ja konsolidiert, ist die Aktie nicht wirklich gefallen, das ist eigentlich untypisch, normalerweise geht die Aktie drunter, das Placement war bei 1,10, also 11 Cent, 1,10 und da sind wir knapp drüber, aber normalerweise ist es so, dass da meistens die Aktie nach unten ausbricht und dort eine Nummer tief findet, weil die Leute das einfach jetzt nicht verstehen, warum da jetzt so teuer die Aktie ist und glauben, sie haben da einen riesen Profit draus gemacht, aber ist spannend, sehr interessant, gefällt mir sehr gut. Ich habe mit ihm auch ausgemacht, dass wir sich in 6 Monaten, 1 Monat je nachdem wieder treffen und ein Update machen und vielleicht sind auch dann irgendwelche Bohrergebnisse da. Also interessante Sache von Goldsource Mainz. Interview habe ich geführt am 9.06.2021. Danke, das war's von euch. Steve, thank you for your time. Was very interesting introduction to your company and good luck with all the drilling. And and hopefully you have or find some high grade ore shoots on the other projects.
Working on it, but Joe, thank you very much for your time, of course, and let's do it again. Of course, if you have any questions, feel free to give us a call, and certainly happy to do it again. And thanks to your audience for listening.
Thank you.